It is time for Money, Power, Politics. We're obviously following major trade news tonight. The president announced a deal with South Korea, which, of course, is a key U.S. trading partner, with just 2 days to spare before the deadline. The deal officially sets the tariff rate on South Korean imports, which we pay for, they don't, at 15%. Also, as part of the deal, Commerce Secretary Howard Lutnick says, I'm going to slow this down, South Korea will provide $350 billion to invest in the United States. And they are going to do it as Trump directs, with 90% of the profits going to the American people. But like Trump's deal with Japan, I am left with the same question. What in the world does that even mean? Who is going to monitor this commitment? How will it work? It's going to give them the headline of headlines tonight. But what is this thing actually going to look like? And all of this uncertainty is impacting another big decision that happened today at the Federal Reserve. Today, Fed Chair Jay Powell signaled that the central bank is not ready to cut interest rates, in part due to the fact of the effects of tariffs remain to be seen. I want to bring in Ron Insana, CNBC senior analyst. The rest of our nightcap is still here. Ron, what do you make of this trade deal?
Oh, it's very much like the one, Steph, that was struck with Japan. It's almost identical, really, in nature. And whether or not the president can direct investments by command remains to be seen. There has been something lost in translation, both in the deal with Japan and South Korea. Both those countries have disputed the notion that they're just handing over, in Japan's case, $550 billion, or in South Korea's case, $350 billion, directly to the president to invest as he sees fit. They're talking about putting investments into shipbuilding, into semiconductor and other industries. And the profit split that the president described as 90-10 in favor of the United States was also called into question. So as the president, going all the way back to The Art of the Deal, that book where, put shiny objects in front of people and, give them something very large to believe in, and they will believe it, it seems to be the pattern here. The thing we shouldn't forget is that tariffs at 15% on South Korea are considerably higher than they were before. When we look across the board right now, tariffs with a 15% baseline are anywhere from 6 to 7% higher, 6%, I should say 6 to 7 times higher than they were before all these negotiations started, which is why the Fed is so reluctant to lower interest rates, because we don't know exactly what this is going to do to consumer prices when all of these things kick in over the course of the next several months.
Ron, let's do some math together. The deal includes a promise from South Korea, this is according to the president, a promise from South Korea to buy $100 billion worth of liquefied natural gas from the U.S. and other energy supplies. Now, Trump has already overpromised how much fossil fuel we can sell to Europe. And I want to show this graph to our audience. The bars on the left, that shows how much energy the EU buys from the U.S. now. On the right, that is what they promise to buy. How is that even going to work? They don't need it.
Well, we don't know, and nor do we know if the United States has the physical capacity to ship all these energy products, whether it's liquefied natural gas, crude oil, or any other energy products that we produce, to all these different countries in the size that the president has described. In fact, when you looked at the deal with Europe, I believe they're committing to something like 4 times what they have imported from the United States on an annual basis. Now, these deals are spread over a number of years. The South Korea deal was 3.5 years. The European deal is a little bit longer than that. So as you said, going into the break, the math is not adding up on a lot of these different deals. None of these are legally binding. None of these are formal commitments yet. None of these are written in technical or legal language that would mirror the types of trade agreements that we've had over the last several decades.
So today, Fox Business posted on their screen that these tariffs have brought in $150 billion to America from foreign countries, right? That screenshot, people like my mother are going to see. I'm going to hear about it over the weekend. But for fact's sake, it's not true. You've got news organizations saying foreign countries are paying us billions. Those tariffs are paid by American companies, which may or may not pass those costs on to consumers.
Yeah, I mean, that big number, that's why Donald Trump does this. Like, all the things about how there's no actual detail in place, that there's lots of things to write, none of that matters. What matters to Donald Trump is that big number. And we saw in the case of Japan. Japan, he said, oh, it's going to be $550 billion. And Japan came out and said, well, actually, the actual investment would be 1 to 2% of that, which is between $5.5 and $11 billion, right? It's a much smaller number. But he wants the big number. That's what he's going for.
But the big number is coming from us.
Well, even
not
if it
them.
existed, right? I mean, if it existed, right? Yes, correct. And so then we get to the other side of this, which is that he is really taking advantage of the fact, and to some extent, he's being enabled by the American business industry, right? Like, the fact that they don't want to raise prices, totally justifiably, given how spooked people are about prices already, which helped with Donald Trump in the White House. But the fact that the markets are not overreacting here, the fact that businesses are absorbing a lot of that cost at this point, all of that is empowering him to keep going after these big numbers and trying to put these numbers up on Fox News. And so we're in this pattern where something's going to break, and it hasn't broken yet. And I think everyone's sort of surprised it hasn't broken yet.
Okay, but we're heading there because
Correct.
more and more companies are finally saying these tariffs are costing them millions and millions of dollars. Some are saying they're going to have to hike prices. And if they don't hike prices, they're going to be laying off employees. They're going to be shrinking their businesses. And when you say the markets haven't been affected, one of the reasons the markets don't look affected is because we now have several trillion-dollar companies that are overweight in the market. But if you actually go under the hood and you look at how retailers are doing, look at clothing manufacturers are doing, they're bracing themselves for having to show earnings in the coming weeks because it's rough.
Yeah, I feel like you just explained that in deep detail and then asked me, a speechwriter who just wrote a comic memoir, what's the question? Like, that sounds right. I don't know. That sounded pretty good to me. What I will say broadly is that I feel like we've been talking about democratic socialists a lot over the last couple of years, and I think that Trump is a Republican socialist, right? I think that he doesn't want to control the means of production, but I think that he wants the president, the government, to direct the economy, and he doesn't care that that's adding inefficiency. He doesn't care that it's going to cost us money. What he wants, ultimately, I mean, what he's super excited about, whether the numbers are real or not, is the idea that he gets to direct the investment, right? He gets to kind of point and say, okay, we're going to put a factory here. We're going to reward this donor over there. The oil and gas companies funded his campaign. Great. We're going to promise that, get everyone to say they're going to buy $1 gazillion of liquid natural gas. And when you think about the free market ideology that, in theory, was behind the Republican Party since forever, where did it go?